In this lecture, I am going to explain what is the return on equity and what is the book value per share and how we can calculate both. So at the end of this video, you will be able to understand the return on equity and the book value per share and how we can calculate and record. Now, this comes under the financial statement analysis. So what is the return on equity first of all, which is also known as ROE. This is a measure of company's annual return dividend by the value of its total shareholder equity expressed as a percentage. And it gives investor an idea of how effectively a company's management is using money invested in it to produce the profit. Because investors are the owners, they are the shareholders, right? So shareholders are the owner of the corporation. They want to know that we have paid money to them, to the corporation, how effectively they are using that money. They want to see. So how they will be able to understand? They will be able to understand with the one analysis which is known as the return on equity. Now look at this, return on equity, ROE, and net income will be the profit minus preferred dividend, right? And average shareholder equity is equal to equity at the beginning of the period plus equity at the end of the period divided by 2, that will be the average shareholder equity. Now, what is the formula? You can see the formula here, return on capital shares equity or a return on equity is equal to profit minus preferred dividend, which is known as a net income, divided by average common shareholder equity. So this is known as return on equity. Look at this example. For example, RJ Corporation has earned the profit of $60,000 and the preferred dividend is $12,000 and equity at the beginning is $575,000, equity at the end is $615,000. Now, what will be the return on equity? So return on equity will be 8.07%. So how we have calculated? So return on equity is the profit minus preferred dividend. The rest of the money that will be given to the common shareholder. So common shareholder, the outside shareholder, they want to know how efficiently our company is using cash or investment. So profit minus preferred share preferred dividend is a 60,000 minus 12,000 is a 48,000 divided by average common shareholder equity. So equity at the beginning plus at the end divided by 2, that is $595,000, which is divided here, and the result will be 8.07%. So this is the return on equity. So which is also known as yield, right? So share outstanding, what is the meaning of share outstanding? So share outstanding are the shares of the company that have been issued and are held by the shareholders. In other words, outstanding are all the shares of the corporation that have been authorized, issued and purchased by the investors and held by them, are known as share outstanding. Now, what is the book value per share and how we can calculate? A commonly analysis tool used to perform a baseline estimate of the value of the company in terms of single share. That is known as book value per share. So book value per share, BVPS, is the ratio of the equity available to the common shareholder divided by number of outstanding share. It means the common shareholder equity, which is also known as assets minus liability, is equal to equity. This is what we are trying to explain. So common shareholder equity divided by average number of shares outstanding is known as book value per share as per the balance sheet, as per the books. For example, suppose that RJ Corporation has $200,000 worth of stockholders equity and $50,000 worth of preferred stock and the average of 25,000 shares outstanding. So it means that 25,000 share outstanding is there. It means the people are having and held these much of shares in the market. The calculation of its book value per share, that will be the shareholders equity minus preferred equity. It means $200,000 minus $50,000 divide by 25,000 common. This is a share outstanding, means the average number of common shares. Then the last, that will be the 6 book value, means $6. That will be the value per share, book value per share. So in this way, this is calculated. So what we have learned today, how to calculate return on equity and what is return on equity, and what is the book value and how to calculate the book value per share to estimate the current position of the corporation, and what is the meaning of shares outstanding.